Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick. He's the senior editor of WeissRatings.com. Welcome back to the show, Sean.
Hey, thanks for having me on.
Sean, it looks like the North American stock markets have been decorating for Christmas because nothing but red on Friday and Tuesday.
Yeah, not a good time. Friday was definitely the Omicron variant of the coronavirus, and that scared the hell out of people, more so than the last ones. There were good reasons for it, but also I think it's overdone. I mean, the reasons are it has more mutations than any of the previous variants, so therefore that kind of scares people. On the other hand, we hear from the doctor who actually started tracking this thing down in South Africa that it's a milder form of the coronavirus. Therefore, it might not be as scary as many people may actually make out. Here's a fun fact. Back during the 1918 pandemic, what ended that pandemic? Would you know?
Time. And natural immunity. Enough people get infected, that'll end it.
Sort of, but what really happened was that it mutated, as all these various diseases do, and it mutated into a version that was less deadly but spread much more quickly. And so it basically replaced all other versions of the 1918 Spanish flu. It turned into something that was less deadly and spread more quickly. And the fun fact is, the flu that we get flu shots for every winter, that's a descendant of the 1918 Spanish flu. It's just not nearly as deadly as it was back in the old days. So eventually that's what's going to happen to the COVID-19 virus. It's going to, or I can't say that for sure, all I'm saying is it's very likely. It'll turn into something we can live with because we get a shot every year or something like that. And so that's what's probably going to happen. We might be seeing that happen now because of the reports out of South Africa that Omicron is not as deadly as say the Delta variant. So that'll be interesting. The other good news is that they'll be able to come up with a vaccine for it fairly quickly. So you put those things together, and I really think that the market selling is overdone, but that's not the only thing driving the market selling. The other thing driving the market selling is that, we saw the head of the Federal Reserve, Jerome Powell, come out and say what Wall Street does not want him to say. That is that we have to stop using the word temporary with inflation, and also that he is willing to consider, and that's the word he used, consider speeding up the tapering process. That's the process where the Fed stops buying so much debt. Now, he's only willing to consider it, and yet that was enough to double the market's losses on the day. So we have a 1-2 punch to the market. I think that will come to a buying opportunity sooner than later. And a lot of things that you might have wished you bought earlier are probably going to go on sale. So make your shopping list because that time is coming.
Mm-hmm. Do you think people pay way too much attention to what Jerome Powell says? Because the markets have their own internal sense of what's going on and what the trends are, and the central banks tend to just mirror that. Why so much attention to what he says?
Well, part of it is because this big rally we've enjoyed for so long is really due to the fact of the Fed pumping up the markets. I mean, the Fed has gotten the market hooked on easy money, right? And so the market, like any junkie, is really afraid of its fix being taken away. If it was a normal market where, economic forces actually played a part in it, then it would be something different. But we saw what happened during the pandemic last year, is that the real economy came to a stop, and the market, after bottoming out rather quickly, went higher and higher and higher. That's a complete disconnect between the real world and the stock market. And that, not all of it, but a lot of it is due to the fact that the Fed pumps everything up and refuses to allow things to fail. So that's why the Fed's so important. That's why people care what Jerome Powell says, because they're all a bunch of easy money junkies, and they're sitting around waiting on their fix. And now that they hear that their dealer is going to change the terms of how they get their fix, they're throwing a hissy fit. So, this could go on for how long? A week maybe? The market seems to adjust faster than they ever used to. And so I don't think it'll go on for too long. We'll get to a spot where we can buy, and then we'll put money to work. With my subscribers, I spent a lot of time taking gains recently because the markets look toppy anyway. That's another thing that actually really greased the skids to the downside. The market was looking for an excuse to sell off. It found one in the new variant of the virus, and it had its fears confirmed. Its fears confirmed by the unkind words from Jerome Powell. But the market was toppy anyway, and so that's one thing you have to keep in mind. Also, nothing goes up in a straight line. Boy, was that market overbought. We had to have a correction at some point. Now we're having it.
Mm-hmm. And the inflation numbers, Germany over 5%, the U.S. over 6%. How long does that continue?
I don't know, but if you're going to tell me that people in the U.S. care about German inflation, you're going to have a hard sell. I don't think they do. Now, they care about their own inflation. But on the other hand, things ain't that bad. Part of it is, and I was banging the inflation drum long before many people on Wall Street were, because I could see it coming. But part of it was obvious because prices actually went down last year, again, due to the pandemic, right? So there was a big compression, and then once people started going out of their homes, they wanted to buy things weren't on the shelves, so prices had to go up so that we could find the new equilibrium. And so, of course, there was going to be inflation. I think we are going to see double-digit inflation. However, I don't think we're going to hyperinflation. I think that we'll have a short period of double-digit inflation, and then things will calm down, because we're already seeing things happen which indicate things will calm down. We're seeing less ships off the coast waiting to come into ports. We're seeing less storage containers stacked up at the ports. Funny thing about that is that once the federal government started finding companies for leaving empty storage containers at the port, or I think it's all storage containers at the port, they said you can have them there for a certain amount of time, then you're going to start paying. After that, suddenly they found drivers to move those containers. What it was they were using the port as storage. Why pay for a warehouse if you can just leave it on the dock, right? So suddenly they had to move things along, and sure enough, that helped out. So I think things will adjust. That does not mean that inflation is in the rearview mirror. I hope I'm making that clear. I expect double-digit inflation, but I expect it'll peak rather quickly, just from the signs we're seeing now, and then we'll see things start to calm down again. So, what does the Fed want to do in this situation? I'm glad I'm not in charge, because whatever you do, people are going to blame you. And everybody always has the solutions until they're the ones put in charge of actually pulling the levers. It's a difficult situation for the Fed. They don't want to slow the economy down. They don't want to increase unemployment, then again, we've come to the best unemployment numbers in the U.S. anyway, in like more than 30 years. So, it's kind of a puzzle, very complex. The problem was too much Fed money for too long, but weaning the market off that is going to prove very, very difficult. Expect a lot of kicking and screaming, just like we're seeing as you and I talk now.
There's record margin debt. Does that mean people are going to be forced to sell off to meet that debt?
Usually it does.
Yeah.
But, that was part of the mania. That was, there's all this free money. Markets are only going up. You might as well borrow and use margin debt. Well, how is that going to end? We know how that ends eventually. And now I'm not recommending my subscribers use margin. I'm sure some people did very well using margin. But at some point, that punch bowl is going to be taken away, and the fat lady's going to sing, and then you have to pay the piper. So I've mixed in all the metaphors there, but you get the point. Of course it was going to happen. So I'm not that surprised that it does.
We'll have more with Sean Brodrick right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick. Sean, would you call crude oil the surprise of the year?
Well, I think everyone was surprised by the big rally in the face of everyone being stuck at home. But the market was anticipating the global economy picking back up. And then they were really shocked on Friday when the price of oil just fell off a cliff. And what that is traders anticipating more countries shutting down international travel. That's really basically it, I think. And so we're already seeing this happening. And, but you get some like weird situations on that. And I'll get back to oil, but I just have to make one point. We aren't allowing people from South Africa to fly in the U.S., but if you're an American and you're over in South Africa, you can fly back home, right? The virus does not check passports. The virus does not care where you were born. The virus is going to come in with an American as easily with a South African. So a lot of what they're doing is panic stuff, but we saw Trump do the same thing. And we see all these countries around the world doing the same thing. Oh, we can't have people from like South Africa. We can't have people from Nigeria. Yeah, but unless you're willing to shut your borders completely, you're kind of open to this. So the best thing to do is to get vaccines out there. I've already lined up my booster shot, and one for my son as well. My wife, who's at risk, already had her booster shot. And so, get your booster shots. If you're trying to be mindful of like other people, wear your masks. That's really to protect other people, but whatever. And so my whole point there is that we're seeing kind of a panic by the governments as well. And we saw panic reflected in what happened to the price of oil, what we're seeing happen to the price of oil now. If you look at the bigger picture, every time there's a new COVID variant, the market and the global economy is more resilient. That tells us that it's very unlikely that we're going to see oil demand slow down much. Therefore, a pullback like we've seen in the price of oil and we've seen in oil and gas leveraged stocks, that's a gift. That really is. Now, they could go lower, but on the other hand, if you're building a shopping list, you might want to put some good oil names on there because this might be the best buying opportunity we've seen in a heck of a long time. I'm also putting on like lithium names. They'll be sold off, even though we just saw a report out that demand for lithium is increasing at 3 times the pace of supply. What does that tell you? That tells you much higher prices. Do you think that a new version of the COVID virus is going to derail the electric car megatrend? I don't think so. In fact, during the pandemic lockdown, we actually saw electric car sales go up. So, again, there's a lot of panic. There is panic by individual investors, there's panic by institutions, and there's panic by governments. but just see your head through this. Keep calm, and just when things get down to price levels you're comfortable with, and there's a lot of stuff that was way too high, I thought. It really got ahead of itself, so as things pull back, or as things show strength when everything else is pulling back, put a little money to work. That's what I would say to do. Of course, I'm not anyone's investment advisor. If you're listening to this, I'm a guy who writes newsletters. I'm not your investment advisor, but that's what I'm doing, and that's what I'm telling my subscribers to do.
In times of high inflation, is gold a good idea?
It should be. I mean, damn it. Why isn't gold behaving better? Oh, this is one of the things that keeps me up at night. Individual companies are still doing well. I mean, you can find some gold explorers, developers, and miners that actually have been outperforming the industry. Continue to look to those for leadership. But if you've seen something that's underperforming, well, guess what? Unless there's new management or something, it's probably going to continue to underperform. So, I still own gold stocks. God help me. I still recommend gold and silver stocks to my subscribers. I really wish gold was performing better in this current situation than it apparently is. Inflation should light a fire under gold. Why isn't it? I don't know. Has the market changed completely, or has some money that would ordinarily go into gold been siphoned off into Bitcoin and other cryptocurrencies? Maybe that's it. In that case, we have to adjust our expectations a little bit. It's a hard thing to figure out right now. It just goes to show nobody has the answers.
Mm-hmm. Any thoughts on the crypto front?
Just that I wish I had a time machine and I can go back and tell my younger self to buy Bitcoin when it was super cheap. Do you want to recommend any of it now? We haven't seen cryptocurrencies go through a serious market correction. That could be instructional. Definitely worth watching. What will happen if we have a big correction? Now, I'm in the we're not going to have a big correction camp. I'm in the camp of we're going to have a short, sharp correction, and then things will find their footing and they'll head higher again. But if it's a long, grinding correction, God help us. I mean, because this doesn't have to be the end of the variance, There could be something beyond Omicron. I'm not sure how the cryptocurrencies will react. We'll have to see. It is a very exciting part of the market. All the young guys I talk to are always excited about all this stuff. It's just when they try to talk the quote-unquote fundamentals of cryptocurrencies, then my eyes roll back in my head, and I start to show my age. Because they're earning. So, it's an interesting market to watch. I'm glad I don't have to worry about that at night, too.
Mm-hmm. Sean, thank you so much for chatting with us.
Thanks for having me on.
My guest has been Sean Brodrick, senior editor at WeissRatings.com. If you have any questions for Sean or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.